Guys, good morning. It's your boy DFS. Today we'll be doing a live analysis on EURUSD. We're doing a drawdown analysis from the previous price action onto the most recent. So hope you enjoyed the live. So first off, you can clearly see on a daily time frame that EURUSD is the overall trend. The bigger trend of EURUSD is a downtrend. The market is currently experiencing a downtrend. So now we saw the market pull back within our demand zone, which is here. And then what we started doing now is we're tracking the structure of this demand zone down, like more like the mini structure. So we started off by marking out the first break of structure we could see, which was here. First break of structure was here. This was the first break of structure here. Now we saw a break here, and then we noticed this false structure, which the market later came and invalidated it. But one thing about this false structure, I call them invalid structure, is in as much as they are invalid, there is something very significant about this structure, which is the demand zone or the supply zone within that structure. I take note of this because in the markets, every single details count. So now I drew a demand zone here, which was, we saw the market pull back after I broke the structure, created this mini structure. I saw it push up to take out the liquidity of this mini structure. Then we saw the market went down and broke structure, came back to the supply zone of this false structure. We tested it and then continued. Now keep that in mind. Anytime you say mini structure, you should always keep in mind that the supply zone or the demand zone of those invalid structures, they do count. Because no details, like I said, no details in the market is a waste. So afterwards, we saw the market retest the supply zone here and then push down and then broke another structure. We saw it now test into the demand zone of this structure, which was here. After it tested the demand zone of this structure, we saw another break towards the downside now. When I see an impulsive move like this, I use a very important strategy to know where the market is supposedly going to pull back to, because most of the time markets will not come for this order block here. Sometimes what the market do is it goes and retests a discount level in order for it to continue. So what I do is I use my Fibonacci when I see this kind of price actions. I use my Fibonacci from the high to the low. My Fibonacci is addicted, so you can either edit it this way, or it's no pressure. So this is just my strategy. Now, when I bring it to the low, I want the market to react for my 0.618 level. And here, the market did not touch my 0.618 level, which means to some extent, I am not considering this high. But we are still going to consider this overall structure. The thing there is, this high, most of the times, as long as it didn't touch the 0.618 level, it will be used as liquidity. So what I do next is I drag it to the next low. We are done with this structure. Now we're focusing on this structure. Now you see this structure now touched from here. It touched our 0.618 level, which was here. As it touched it, what happened? It took out the liquidity from this high and then pushed down to continue the trend. So that should show us a continuation of the structure. So then we now have here as our break of structure. We have here as our next break of structure. Now, this structure, we tested this order block here. This structure, we tested this order block. Oh, sorry, let's move my mouse. We tested this order block, which we can clearly see here, and then continued. And now we now have another impulsive move. After it touched this order block, we saw the market rally down. So what we do now is we pick our Fibonacci from this high from this high to this low. Now, the market did not touch our 0.618 level here. It didn't touch our 0.618 level here. It rather touched our 0.5 and then continued. Now, the thing there is when you see market now acts like this, it doesn't react from 0.618 level. Rather, it reacts from the 0.5 level. It means one thing. That market now, for it to just react from, just touch the 0.5 and continue the trend. What it means now is, normally our 0.618 level now was supposed to act as a resistance for this market. But since it was the 0.5 that acted as the main resistance, we didn't see the market push up to nearly touching the 0.618. We just saw it just tapped into the 0.5 and then continued. What it means at this point is that there is another form of resistance this market is respecting, no longer our 0.618. And if this market is supposed to continue on this trend, it is supposed to continue on this trend based on the new resistance that the market has newly founded or has newly founded here. You understand what I'm saying? So now what we do now is, at this point, when I see something like when I see this kind of price action, I know for a fact that we have a trend line, a resisting trend line, which is, how do I do it? From here, from the point where it started resisting our 0.618, where it touched our 0.5, we have to connect all the lower highs all together. We connect all the lower highs, and then voila. This is what we're having. So this is a strategy I came up with myself, and it's very unique. It's something that I founded, not giving it name yet. I founded it, and it has been helping me maintain a certain level of consistency in the forex market. Believe me, it works very, very, very well. So now this is now our new trend line. This is now our trend line. So what we do now is we target as our trend line. So now the market structure continued, where it continued on the base of this trend line. Now, what we were looking for now is we want to make sure that anytime the market, because this trend line now is acting as a resistance for this market. So once this trend line gets broken at any point in time, it means that this downtrend, this mini structure downtrend we're seeing, is over. That's what you should keep in mind. So it is just a signal, because anytime the market touches this trend line, it's acting as a resistance. So when the market eventually breaks out from this resistance should eventually turn out to be a support, which was what happened here. So we saw the trend line, resistance, 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 and then resistance, and then the market broke out from it. What happened? Tested it, pushed up or support. You can get a very good entry if you cut this move. But here, you have another block here. Your stop loss should be at your swing low, and your take profit should be at the genesis of the trend line, which is most times here. Now you've got yourself 900 pips, which is crazy. Very, very crazy. This strategy works on any pairs at all. Any pairs at all. If you are a newbie trader out there looking for a profitable community in order to experience exponential growth and profit in the forex market, you can do well to join my community. We have an academy in Owerri, so you can do well to join our academy and relate with so many traders that have the same ambition as you, and let's go together. So I'll see you guys in my next video. I love you guys. I hope you guys enjoyed this, and see you in the next. Bye. Love you.